Hey, give me a second. I'm on this call. Hit you up in an hour. Let's go, G12. Welcome to the call, you guys. Welcome to the call.
In the building.
Yes. What's going on? I do not own the rights to this music. We're going to be here jamming out, you guys. I'm so excited to have you on the call. We're going to be getting this spin off in about 1 minute. 1 minute. So make sure you have your notes, your pen ready. Now's the time to reach out to the team. Let them know we on the call. All right, guys, we're going to be starting in about 30 seconds. All right. What is going on, everybody? My name is Isis Love. For any new people that we have on this call, I am your mentor here in Trade Nation and Generation 12. And I'm so super excited to be on this call, you guys. We do this call every Monday at 8 o'clock, not unless otherwise posted. So the whole point of this call is for you, to be honest. It's really for you. It's to make sure that you are fully understanding what this is when we're dealing with Forex. A lot of times people want certain one-on-ones, and I'm like, hey, look, this is our time for one-on-one. So like ask questions. This is the time that I designate every Monday to get on here with you guys to make sure that we get this. So take advantage of it. Don't take it for granted. Make sure, if you signed up anybody, it's so important that you get them on this call so that they can, learn and grow and expand, all right? So let me make sure it's recorded. We're going to go ahead and dive in tonight, guys. We're going to be doing the basics. And this is how we're going to be doing this basics. We're going to be changing things up. Now, I know we have some of our veterans on here. You're probably going to know some of this basic stuff, but our motto. Our motto is trade. What's one of them? But our motto is we're always a student. So no matter how good you are, there's nothing wrong with getting on the basics, learning it, going back over and over. I'm in this with you guys. Like, I'm learning with y'all, right? And so, with that being said, we're going to start coming on here. We're going to do this. It's going to be in 2-week intervals. So basically, however far we get between this Monday and next Monday with the basics, we'll start all over and we'll do it again. So we're going to be going through this whole academy with each other. I know you went over it, but guess what? Going over the academy 1 time, 2 times, that's cute, right? But you got to engrave this in your mind. That's all it is. It's just like, you know, school for the first time. You had to keep getting the homework. So you got to treat this just that special, right? By really just continuing with this repetition. So the more we drill this in our mind over and over and over again, the more it becomes easier. And now we're like a study group, because after we watch the videos, guess what? We're going to discuss it. And this is only going to work if we make this a discussion versus just me talking. It's amazing when we all can come together, you guys. So before we get started,
Okay.
hello? Okay. So you said something, Brittany?
No, I was sorry, I muted it.
Okay, cool. Thank you, sweetie. Okay, so what we're going to do really quick, because I know some people are still confused about Hugo's Way, what it is, what it does. I wanted to really take the time really quick and go over that. So Hugo's Way is a broker that majority of the people use. You could trade cryptocurrency with this broker. You could do indices with this broker. That's why a lot of people like this broker. Is this the only broker you could choose from? No. Do your research. Check out other brokers if you don't want to go with this broker. But you need a broker's account. Everybody should set up a live account, even if you're not putting money in there. You still should set up a live account, because the law of preparation states if you prepare for what you already want, it's going to come, right? So we're going to take questions in just a second. So Hugo's Way, right? We're going to log in, right? And it's really simple, but sometimes, you know, these computer things can get crazy. So this is going to be recorded. I highly recommend, if you get stuck, you just go back to the training. If you have anybody new that's getting started and you don't know how to do this, get them on the training. Is there somebody's trying to speak? I can't hear. All right, wait till the load up. I got my jams playing, y'all. It's important to have some good vibes going when you're trading and stuff. Come on, Hugo's Way. Okay, I don't know what's going on with my internet connection. Let me see. Internet connection looks supreme. Let me refresh it. All right, let me do it again. So you make an account. Of course, my account is already made, so I'm not going to go back from scratch. But one thing you need to know is when you're opening up an account with most of these brokers, it's very secure, meaning that when you first sign up, you're going to have to send in like a ID and a bill, and it has to be clear, right? And if it's not clear, they're going to kick it back. But don't get frustrated. You know, just go with the process, okay? So I'm going to try to open up another window because that one was like acting crazy. Let me see. Oh, here it goes. Okay, cool. So we're here. Let's just imagine your account is already set up, right? So now you are ready to deposit funds. Now pay attention, right? If you wasn't paying attention before, please pay attention now, right? So you're on your account. Your stuff is verified. You can do this if you want to for more security, right? You would just go here, get started, and read the information. But pay attention to these little things on the side, right? You're going to go to deposit. Now, there's different ways you can deposit your money. Most people use Zelle, right? Most people use Zelle. Not everybody's bank allows them to do Zelle. So you could do Bitcoin transaction by buying Bitcoin on Cash App, right? I'm not going to go deep into that today, but when I don't know something, what I do is Google it, YouTube it. We do it everything else. All right, BTC. Remember, it's about interdependence, but don't be scared to ask for help at the same time. But definitely try to see what you can figure out first on Cash App. So if you don't know how to do it, look, you got all these people right here that's going to explain to you how to buy it on Cash App. It's not long, so check it out, okay? So let me go back to Hugo's way. So we want to deposit fund. Let's just say mine is Zelle because I use Zelle with my bank. So go here, select your bank. It's another bank. I go there. My next thing is my amount. How much am I going to do? It lets you know right here. Okay, it lets you know right here what you need to do. So when you put your amount in, I'm not going to do it because I don't want it to create one. But if you put your amount in, something's going to pop up in the screen. And you can read it right here and tell you what to do. They're going to tell you when you go through Zelle to email this person, right? This is their email address. This is their name. And let's just say I want to do $25. They're going to tell me to send $24.95 to this person. This person works with Hugo's Way. So don't be alarmed or be like, oh my gosh, like, what is this? Like, it's just part of the process. So you go to create. You'll do everything through your Zelle app if you're using Zelle. And then the money will, it takes a couple of minutes. It depends on what bank you have, but you'll see it'll say approved, right? Some of them say cancel. Maybe it didn't go through for some reason, but that's how it's gonna look, right? And then once it's deposited, the money's gonna show up right here in this wallet. You'll see the 25 right there, right? So that's the first step to depositing money. Does anybody have questions really quick on how to deposit money?
No.
Okay, cool beans. Okay, so that's how you deposit it. So now the money's in here. Now your next step has to be, okay, well, how can I take my money from Hugo's Way to MetaTrader 4, right? That question everybody wants to know. So what you have to do first is go to My Accounts. You have to create an account. You have to create basically your live account. So you will go to Create Account, right? And then you will Hugo's Way to empty, to ECN. If you want to do a demo, you would do demo. If you want to go live, it's right there. So let's just click on it. Leverage. Please pay attention, right? This is so important. Leverage. What is leverage? We're going to go over that in the academy, but leverage is basically saying if I have $25 in my broker's account, my broker is going to match me. If I do the 100, that means every $1 the broker is going to match me $100. So if I had $2 in my account, I really have 200. Remember, the brokers are here to give you leverage. Back in the day, you had to at least have 10K to trade. You don't need that anymore. So as a beginner, you should focus on about 200 leverage. What does that mean? If you want to get all fancy and go 500, yes, you can get your money quicker, but you also can lose it quicker. So you want to have you want to have a leverage like this. You're going to create an account. Once the account is created, it's going to send you a password and a login, a password and your username to your email, right? Now, once you get that, okay, follow along because I can't show you this part. It's on my cell phone. Once you get that, you go to MetaTrader 4. You're going to go to, well, let me see if I can, hold on real quick. Now, I don't need that, so wait a minute. Let me see if y'all can see me like this. It's a little dark in my spot. Oh, no, it's not that dark. I got my other computer right here. So, so if y'all go to the front screen, hold on, where that plus button is, right where that plus button is, we're going to hit the plus button. You're going to come here. It says open up a demo or log into existing. Since we just opened up a live, we're going to open up an existing account. So we go log into existing. Now, when we get to this screen, right, it says like basically find broker. You're going to type in Hugo's Way, and then you're going to see Hugo's Way Real 3. Hugo's Way Real 3. You're going to click on it, and then it's going to ask you to log in. You're going to use that same login information that they just emailed to you, right? Once you do that, guess what? Your account is created. Your live account is now on here, right? That's the first step. Did that not make any sense to anybody? I can run that back.
Yeah, you said press the plus button at the top right and then look for Hugo's Way. You said press the plus button at the top right and then look for Hugo's Way.
Yeah, you're gonna press the top button. You're gonna go to log into existing account.
Yeah, not the demo.
Yeah, not the demo. Log into existing, and then you're gonna search for Hugo's Way, like you said, and then that's when you're gonna put that login information that they emailed to you.
Gotcha.
Okay, cool. So now that's just one more step. Now we already went over 2 steps. Remember, step 1 was depositing money. Step 2 was creating your account. The last and final step to actually move the money into MetaTrader 4, you go to internal transfer. You go to wallet to MT4. Now, when you're ready to take your money off of MetaTrader 4, you would do MetaTrader 4 to wallet. This is our wallet. Hugo's Way is our wallet. So we're going to go to wallet to MT4. You're going to select which account, right? You're going to go to the amount, $45 or however much you want, and then you hit request transfer. It should take a couple of seconds, to be honest. It should take a couple of seconds, and it's already transferred inside of your MT4. I'll say that one more time. Step 1 was depositing money using whatever method you want to. If you're not sure how to, go to your best friend, Google, right? They're going to show you. Because some stuff IML is not going to teach you. You're going to have to go out and also learn yourself. So, second step was my accounts, opening up account. Third step was internal transfer. The money's in there. You're all set. All set. Anybody have any other questions about opening up a demo, funding it with Hugo's Way? All right, you guys. So now is the time we're going to go ahead and dive. I just wanted to take the time to show y'all that because I know a couple people was interested. But now's the time we're about to dive in this academy together as a team. Who cares if you already did it? We're going to do it together, right? So some of the videos we're not going to go into because they're pretty much self-explanatory. We should already know what Forex is by now. The foreign exchange market, exchanging one currency for another currency, right? We should at least know that by now. We're not going to go through that. We should already know the history, right? What traded? Okay, so let's start right here. Let's see what's traded in the Forex market. So definitely pay attention, take notes. If you didn't take notes the first time, definitely take notes. It's only 2 minutes and 36 seconds. Get your popcorn, get your drinks. Go ahead, use the bathroom, what you got to do. And after this 2 minutes is up, we're going to discuss what we just seen, okay? The more we can continue to do this as a team, even if we got to watch it 12 times, I guarantee you it's going to stick. All right, so let's go. Hopefully my internet's gonna okay, here you go. And this is a new academy, by the way. The academy was not like this before.
Welcome back to the IML Academy. In this video, we're going to discuss what exactly...
Hold on, y'all. Let me run it back. I'm going to turn the internet off on my other phone, on my other computer really quick. Turn off the Wi-Fi. Come on. All right. Okay, cool. Let's play again.
Welcome back to the IML Academy. In this video, we're going to discuss what exactly is traded in the Forex market. It's important to understand the Forex market is an online exchange for all currency pairs around the world. As the currency exchange rates fluctuate, you can choose to buy or sell currencies. And if you forecast the move correctly, you stand to make a profit. When trading, you're always buying one currency and selling the other, which is why all currencies are quoted in pairs. Let's take a look at all the currencies, among other things, you can trade in the Forex market, beginning with the majors and minors. Majors are any currencies that are paired with the US dollar, such as the EUR USD.
So make sure you're taking notes because I'm going to be asking you questions.
Known as the euro dollar. The USD JPY, known as the dollar yen. The GBP USD, known as the pound dollar. The USD chef, which is known as the dollar Swiss. The USD CAD, which is known as the dollar loonie. The AUD USD, which is known as the Aussie dollar, and the NZD USD, which is known as the Kiwi dollar. Minors, also known as cross pairs, are any currencies traded against one another that doesn't involve the US dollar, such as the yen crosses, the euro crosses, the pound crosses, and even the Aussie crosses. Next are the exotics, such as the Hong Kong dollar, the South African rand, and the Mexican peso, which are some of the most popular traded exotics in the Forex market. You can also trade commodities such as oil and gas, metals such as gold and silver, stocks such as Apple and US 30, and even cryptos such as Bitcoin and Ripple. As you can tell, the Forex market is very large and diverse and is a wonderland for any trader. Pick a few pairs to master, and the better you get, the more money you can make. This concludes our training on what is traded in the Forex market. We'll see you.
This is why I love this academy. That took all but 2 minutes. All but 2 minutes just to sit down and look at this video, right? And take some notes. So with that being said, let's see. With that being said, can somebody tell me give me two major pairs in the Forex market?
Euro USD and the USD JPY.
Let's go. Do y'all agree with that?
Yep.
Let's go. All right, cool. Somebody give me two exotic pairs. All right, somebody just give me one. Give me one exotic pair that they just went over.
I didn't catch it, went too fast.
Anybody took notes and put it in their notes?
It was going too fast. Try to.
Got you. Okay, so one of them is the well, you know what? I'm not gonna tell y'all. That's gonna be one of your homework thingies. Hold on. It's the only way we're gonna get better with remembering this. So name two exotic pairs. Okay, cool. So somebody give me two minor pairs.
Odd cat.
Okay. Anybody else? Another one?
What'd she say?
For the minor.
What'd she say?
She said odd CAD.
What's that? What'd she say?
Australian dollar versus Canadian dollar.
Gotcha.
Anybody got another one?
Not the minor.
NZD JPY.
Okay. NZD-JPY, do y'all agree?
Yeah.
All right, cool. So that's another homework thing we're going to have to get down. Okay, cool. Amazing. Let's go ahead and let's go into the next video, right? Let's knock this out, y'all. We master traders. We're learning this all together. Now, let's see who's in this market. So pay attention because I'm going to be giving some questions.
Welcome back to the IML Academy. In this video, we're going to be discussing who are the major market participants in the FX market. Each of the participants plays a vital role in the FX market and the way it moves. It's in your best interest to learn about each of the participants and how they affect the market. The first major market participants are the commercial banks, aka the market makers. They are made up of a small number of banks that sit at top of the FX market, which controls a majority of the world's money and which way the market moves. They in part also deal with the central banks, which are the second major market participants. Central banks hold a large currency reserve of their domestic currency as well as their trading partners. They control many economic factors such as monetary policies, interest rates, and more. And when they put out a news release, it has an immediate and powerful effect inside of the market and which direction the market moves. Next are the large international companies, also known as the MCNs, such as companies like Coca-Cola, and when they're doing business in international markets, selling their products in the UK. What they are actually doing is trading the pound for the US dollar in the FX market in large quantities and sending this back to the United States. This in turn can move the market in great volumes. 4 are the fund managers, such as hedge funds and FX brokers, who are actively trading in the FX market, which manipulates rates, spreads, and other things, and are trading against us, the final participants, the retail traders. Retail traders are comprised of individuals and small businesses who trade their own money in the FX market. Retail traders control the smallest share of the FX market, but are making up a significant and fast-growing proportion to the FX market as the number of worldwide traders continues to increase. This is going to conclude our training on major market participants in the FX market.
Boom, simple video. That was like 2 minutes. Okay, hey, Sydney, are you there? Y'all don't get shy on me either. Let me see if she on here still. Okay, she left. Hey, J Boss, could you give me, first off, could you give me all of the market participants?
I caught some of the video, but I know the market participants are the bankers, hedge funds, and also the retail market. I mean, the retail traders. And I think I'm missing one.
You're missing 2. You said the banks, the retail, hedge fund. Who else knows the other 2?
It was 4 in all, right?
No, it's 5.
Commercial banks, central banks, the MCN, the fund managers, and the retail traders.
There you go. There you go. Thank you. Thank you, Sean.
What were the fund managers?
Yeah, fund managers.
Okay.
All right. Thank you so much for sharing. That's my bro, y'all. Generational wealth. All right, y'all. Let's go ahead to the next video and see when we go back and run this back again the next 2 weeks, we're going to be knocking them out. Y'all going to be knowing it because we're going to be hitting it in like that repetition. So don't worry if you don't know now, because the more we do this, y'all, because we got to be able to know this off the top of our head, right, without the notes. So let's go ahead. Let's see when is a good time to trade. Now, I'm going to be asking y'all questions, so keep that in mind.
Welcome back to the IML Academy. In this video, we're going to discuss what are the best times to trade Forex. Initially, there are 4 major trading sessions. 2 sessions which are good to spot ideal setups, and 2 sessions which are good to trade. Learning about these sessions will help you create a trading routine that will be beneficial to you and your trading. The 4 major sessions are: 1, the Sydney session. This marks the official start of the trading day. This is the smallest and calmest session to trade, and where pairs like the AUD and NZD will make their initial moves. 2, the Tokyo session. This starts the second official trading session of the day and is the third largest trading center in the world. This is where the JPY, best known as the yen, will begin to make their initial moves, which is the third most traded currency pair in the world, seeing about 6% of total FX transactions. The Sydney and Tokyo session combined make up the Asian session, which is what many FX traders refer it to. This session has low liquidity and trading volume, which is why it's an ideal session for new traders to find their footing and to spot ideal trading setups. Leading into the third official largest trading session in the world, the London session. This is where liquidity and volume is at an all-time high, and a lot of traders are anticipating to make profits. 34% of all FX transactions in the world happen right here, with the pound, euro, and chefs being the most traded pairs. The next is the New York trading session, which is the fourth official trading session, marking the end of the trading day. This is also the second largest trading session in the entire world. 85% of all trades involve the US dollar. The CAD and USD pairs are the most traded pairs here, along with many major news releases that greatly affect the market. When the New York session is done, the Sydney session begins again, starting a new day in the FX trading. The best times to trade would be during session overlaps. This is where two major world market sessions are opened at the same exact time, resulting in high volatility, high liquidity, and high volume due to all market participants trading at the same time. A good overlap is the Tokyo into the London, where the yens, the pounds, the euros, and the chefs are making a lot of moves. The best overlap is the London into the New York. This is where the pounds, the euros, and the USDs are making all of their moves and major news releases are happening. To find which of the market sessions are open and overlapping in your time zone, feel free to visit Forex Time Zone Converter to begin creating your trading routine. This is going to conclude our training.
Okay, so make sure you go to Forex. Let me see what he said. Online converter, I think.
Time Zone Converter to begin creating your trading routine. Forex Time Zone Converter to begin.
All right, so write that down. Forex online time converter. When you go there, you'll be able to see, judging off your time zone, when is a good time to trade. So, hey, Sydney, are you there? Are you there, Sydney?
Yeah, I am.
Amazing. I'm happy to have you on here. I got a question for you. How many sessions are there? How many trading sessions are there?
There are 4 trading sessions.
Amazing. And what's the largest one?
The largest one, I believe, is it New York?
Does anybody say New York is the largest? What do y'all feel?
They said 85%.
Okay. Anybody say New York is the largest?
No.
Which one's the largest?
London.
Okay, cool. So the London is the first largest. The second largest is the New York session. Thank you so much, Sydney.
Okay, you're welcome.
Just a little pop quiz, y'all. We taking it back school style. So,
Okay.
so let me
sorry.
let me ask y'all this: is it a good time to trade during the overlap session?
Yes, they say that's the best time.
Yes, the best time.
Yeah.
That's when they're the busiest.
Cool. And does anybody know the two overlap times? Like which sessions overlap?
Tokyo and
into
London.
London.
And London and New York.
There you go. Okay, cool. Now this was gonna be a good one. Now when we're trading on a New York session, what pairs are gonna be hot during the New York session?
CAD and USD.
CAD and USD for New York. You are correct. Wait, is she correct, y'all? For New York.
Yes.
Let's see real quick.
This marks the official start of the trading day. This is the smallest and calmest session to trade, and where pairs like the AUD and NZD will make their initial moves.
So y'all got that. So think about it. AUD NUZ is for the first session, the Sydney session. So remember that.
2, the Tokyo session. This starts the second trading session of the day and is the third largest trading center in the world. This is where the
JPY pairs for the Tokyo,
best known as the yen, will begin to make their initial moves, which is the third most traded currency pair in the world, seeing about 6% of total FX transactions. The Sydney and Tokyo session combined make up the Asian session, which is what many FX traders refer it to. This session has low liquidity and trading volume, which is why it's an ideal session for new traders to find their footing and to spot ideal trading setups, leading into the third official and largest trading session in the world, the London session. This is where liquidity and volume is at an all-time high, and a lot of traders are anticipating to make profits. 34% of all FX transactions in the world happen right here, with the pound, euro, and chefs being the most traded pairs. The next is the New York trading session, which is the fourth official trading session, marking the end of the trading day. This is also the second largest trading session in the entire world. 85% of all trades involve the US dollar. The CAD and USD pairs.
There you go. She's right. The CAD and USD pairs, you guys, for the New York session. All right. So that's good. Y'all did a great job. Let's go ahead and move on. Now this call is going to run over to about 9:15 since we started a little late. So we're going to just continue to knock these videos out, y'all. All right, next one. They really short. This academy is really, really short. Okay, this next one, buys versus sells.
Welcome back to the IML Academy. In this video, we're going to be discussing the difference between a buy and a sell in the Forex market. Now, as a trader, it's very important that you understand the difference between the two, because you can make money both buying and selling currency pairs in the financial exchange market. So to better understand the psychology of this, let's begin to think like a retailer. A retailer likes to purchase goods when they're low and sell goods when they're high. The reason being is because as the goods exchange in value, they stand to make a profit. Now, we can apply the same exact concept to the Forex market, where we're buying and selling currency pairs and making money as the value is exchanging. Let's take a look at the live charts here. We went ahead and highlighted different points in the market where the market was high and low. These are the best places for a trader to want to buy and sell inside of the market. The whole goal of making money is to learn when to buy, and you make money as the exchange rate is changing. As an example, when the market is extremely low, we look to put in buy orders, and as the market is coming up, we get to make money. And the same is as true as when the market is high in several examples here. When the market comes to a high point, we look to sell, and as the market comes down, we're able to make money, okay? Now, a little bit of vocabulary just for you guys. As the market is beginning to come up, you will hear a trader say the market is going long. Long simply means the market is going to start going in an uptrending motion. That means that the trader will get ready to buy the currency pair. Now, when a trader says short the currency pair, that means that the trader is going to sell a certain currency pair and expect the market to come down. Now, the only exception to the foreign exchange market is that you want to be sure that you're on the right side of buying versus selling. I'm going to show you an example here. Let's say you're looking to put in a long position or a buy position right here, and you're expecting the market to come up. If you are correct, then what will happen is that you would begin to make money. However, if you put in a buy order and the market begins to come down, this is where you lose money inside of the market. So as a trader, it's very important that you continue to
All right, all right. What does it mean if I say the market is going short?
Is going down. You want to
Yep,
sell.
yep. That's right, that's right. So if I say the market is going long, then what does that mean?
It's going up.
Amazing, amazing. And so as you can see, you guys, just like when we go into the store, we don't want to pay full price. We want to buy it on the low. So right here, you always want to, we'll get into that. I'm not going to get deep, but right here, this would have been a buy opportunity because we would have knew that the market would have went up. We would have started buying at this point. And as you see, the market eventually went up. We could have cashed out. And then we say, hey, what goes up goes down. The market fell again. We bought again. We sell again. We buy again. We sell again. That's why it's amazing because you have 24 hours, basically 7 days a week if you do cryptocurrency to make money in this whole market, right? So that's a beautiful thing. So, okay, so that video is quick. So we're going to do this for another maybe like 15 minutes. Then we're going to open it up for questions. And then we're going to mark up some charts and just see deeper on what that means when we talk about marking up the charts. So let's look at this PIP video.
Welcome back to the IML Academy. In this video, we're going to discuss what is PIP. A PIP is an abbreviation for the meaning points in percentage, which is the unit of measure to express the change in value between two currencies. What that actually means is that when the currency exchange rate is going up or when the exchange rate currency is coming down, there has to be a unit of measure to measure it going up and to measure it going down. And every single time the market moves 1 pip or 1 point, this is how traders are able to make or lose money buying and selling inside of the foreign exchange market. Now, to better understand PIP, let's break down what the price actually looks like and how to read it. Anytime we get a price is broken up into 3 parts. We have the base currency, which is the numbers before the decimal and the 2 numbers after the decimal. This is the base currency of exchange for the country that's getting traded. So in this example, we're on the Great British Pound for the US dollar. That means the Great British Pound for the US dollar is at an exchange rate of $1.31 to the British pounds. Now, the 3rd and 4th decimal, these are the fractions of the currencies that are moving and calculating when the market is going up and when the market is going down. Every single time this unit of measure changes by 1 decimal, the pip count is either going up or the pip count is coming down. In this example, we can see that the Great British Pound to the US dollar started at 1.29900 and risen to 1.31800. Before we get into that, let's take a look at the pip count happening in between. As we see here, let's take a look at this current price of 1.3110. When the exchange rate changes from 1.3110 to 1.3111, this is the pip count going up by 1. Every time the market moves a pip, we are making or losing money. Now, as we see here, as the value continues to rise, the pip count will continue to rise. So the pip count will then go from 1.3111 to 1.3112 to then 1.3113 to 1.3114 to 1.3115. So as you see, it's continuing to rise. Now, there is a 5th decimal happening in the majority of the currencies, which is known as the pipette. The pipette is the fraction of the pip. Now, since the pipette doesn't play such a significant role, many traders don't even acknowledge the pipette and they simply look for price in terms of the base currency and the pip. Let's jump into an example. Let's say we were looking to buy the GBP USD right here at this wick of 1.29900. And then the GBP USD risen and came right over here to 1.31800. What we can do to find out what the pip count is simply subtract the pips inside of the number. So by coming over here, you can see that I took 3180 and I subtracted it by 2990, which were the digits on the right side of the decimal.
So really quick before we continue. So the only thing he did, if you look, he took off the first number. Doesn't matter, just take off the first number. And he's only subtracting the 4 numbers after the decimal. Because remember, the 0 is a pipette. So we're not even counting that, right? And even if you was to count it, it still would be 0 at the end of the day. So you would knock off. So put that on your notes. When you're calculating Forex pairs, because some of the pairs are calculated different, but when you're calculating Forex pairs, you want to take off the first one, and then you want to do the 4 numbers behind the decimal. Okay? Does that make sense? If it doesn't make sense, let me know. I kind of muted people's line, my bad. So if you were muted, you could just unmute it and let me know.
It makes sense.
Okay, cool. Anybody?
Yeah.
Okay. Okay, cool. All right, let's go ahead and move on.
By minusing these 2 numbers, I was left over with a remainder of 190. That 190 represents the pip difference from the price rising of 129,900 to 1.31800. Now, this is very, very technical. Luckily, through technology and using our trading views and our MT4s, we're able to simply measure the pips with a tool. So as I come over here and get a measuring tool, you'll see right from this point, as I bring this box up, you see the pip count rise. And you can see from line to line, the market perfectly went up 190 pips. Pips are a trader's best friend, and you'll hear a lot of traders coin and say the expression, catching pips. Catching pips is a way that a trader expresses the amount of pips that they were able to net or secure in a buying or selling position inside of the market. In one of our following videos, you're going to learn what lot sizes are, and lot sizes are the way that you can use.
All right, all right. So as we see, it's very important to know, how to calculate pips. Pips is your money. So whenever you may see in a group, somebody may say, hey, your take profit is 20 pips from your entry. This right here is your entry, is your entry price. So we're saying it's 20 pips. You're basically going to be taking this 90 and adding 20 pips to it. So you would basically put, it would be 2990 plus 20. So you'll be able to figure out what your take profit's going to be, right? So I'm going to put that down for the homework so you can further explain. Now, did that not make sense for anybody? Because no question is a dumb question.
I'm just learning as we go, so it's like I don't really have a question.
Okay, amazing, Brittany, amazing. Okay, anybody else?
You said something about 2990 plus 20. You said
Yeah.
if it was 20 pips, and if you added the 2990, that's how much the money would be at, basically.
Yeah, basically. So so in a nutshell, prices right here, and I'm like, hey y'all, get in 20. We're going in for a buy, obviously. Get in 20 pips at your entry point. Meaning like, okay, here's entry. So we need to add 20 pips in here to figure out what our take profit's gonna be. because our take profit is our money line. So let's just say where this dotted line is, let's just use our imagination really quick. And let's just say this dotted line was our take profit. That means when this candle went up, it knocked it, and that means it knocked us out in profit, because our take profit was where this dotted line is. So that means the market goes up, boop, you got your money.
Once it goes past it?
Yeah, once it like touches it. Like, you know, just like kind of just touch it.
Okay.
All right, cool. All right, we're knocking these videos out, y'all. Oh, this is very important. We're going to do this in the next one, and then we'll wrap it up with some questions and marking up some charts. This is so very important to know this part right here.
Welcome back to the IML Academy. In this video, we're going to cover what is a lot size. Then I'm going to run you guys through some examples of how to combine a lot size with a pip count to calculate your total gain and loss inside of the market. Now, as we begin, we're going to look at 3 of the most popularly used Forex position sizes inside of the market. These position or lot sizes are known as the micro, the mini, and the lot size. Each one of these positions being traded represents a total number of currency units that you're exchanging within the market. However, traders look at it through a much more simple eye. Whenever a trader is trading a micro would look like a 0.01 position inside of the market. This is how it's also going to look in your trading window or in your MT4 trading app, whether it's on the iPhone or Android. Every time a trader trades a micro position in the market, whenever the position moves up or down 1 pip, you will be able to gain a net of 10 cents per pip or lose 10 cents per pip.
Right.
Now, when a trader trades a mini position inside of the market, this position will look like a 0.10 inside of the market, and you will gain a total of $1 per pip or lose $1 per pip if the market is going against you. And then one of the most popular positions that traders like to trade is what's known as a full lots. Traders also like to call this a standard position. A standard position looks like a 1.00 inside of the market, and this unit is worth $10 per pip. So what we're going to do is let's run through a simple formula so you can understand how lot sizes combined with number of pips can equal a total gain or loss. We'll take a look at this example of GBP USD rising from 1.2900 to 1.31800. This gain here was a total of 190 pips inside of the market. So now if you are going to place a buy position right here on GBP USD at 1.2900 and the market rose up 190 pips, let's see how much money you would have made trading it on each position. Using a micro position on a 190 pip trade, that would have netted you a total of $19 into your account. Now, if you were trading on a 0.10 position, known as a mini, you would have netted a total of $190 profit inside of your account. And if you were trading on a full lot size, that would have netted you a total of $1,900 in your account. Can you begin to see the formula of how this works? Any position size that you're trading inside of the market is basically worth 10 times that amount per pip inside of the market due to the unit of the currency. So very simple put, a 0.01 is going to get you times 10 cents per pip. A 0.10 times 10 is going to make you $1 per pip. What looks like a $1 position times 10 will net you $10 per pip. The same is as true as if you're trading anything. If you were to be trading 2 lot sizes, and this would look like 2.00 you would be making $20 per pip. If this was 5.00, known as 5 lots or 5 standards, times 10, you would be making $50 per pip inside of the market. Now, just keep in mind that if you're going to put in a buy position, you can very well make this money, but it's just as true as if this market went against you, you could potentially lose this money inside of your account. This is why setting stop losses, take profits, and using proper risk management in a trade will allow a trader to adequately decide how much money they're going to make or lose per trade inside of the market. This is going to conclude our training on lot sizes in the market. Be sure you're 100% comfortable with the lot size that you are trading with inside the market, and you know exactly the amount of money that you would make or lose.
All right. This video right here is so key because you want to know how much money you're making. A lot of times we just hop in a trade, and being a beginner, sometimes we just hop in and we're like, woo, look at this profit that we're making, not even knowing that you're over leveraging your account. So you want to know what you're putting in your MetaTrader 4, right? You want to know what you're putting in your MetaTrader 4 so you know how much money you're going to get. You got to know how much money you want. How much money do you want, right? How much money do you want to have? Let's just say that. So for example, let's just break it down further. Like he said, it went up 190 pips. Times 10 cents is 19. Times the dollar is 190. Times, $10 is 1,900, right? So really quick, let's go. He said something about stop loss. And like I said, I know that we have some people on here that are not beginners, but even if not, it's still good if you get on this call because you're always a student. Regardless, you're always a student. There's always more room for learning. So let's use our imagination really quick. So let's just say this yellow line is my take profit. I want the market to go down. Let's see. Let's just say I want the market to go down 121 pips. And this is US 30, so that moves like crazy. So my take profit will be right here in this yellow area. I will put these numbers in my MetaTrader 4. That will be my take profit. Now, let's grab my stop loss and let's talk about that. Right? So what is a stop loss? And we're going to get to that video, but I'll already explain it really quick. If this market doesn't go down like I want it to, because let's just face it, I don't know if you guys knew it or not, but you're not going to win every trade. You're not going to win every trade, but the good thing about a stop loss is you're practicing risk management. Yes, we can't win them all, but what we can do is figure out how much we want to lose. Now, let me show you. This is the main reason why a lot of people do not, even including myself, I do it sometimes as well. It just depends on what pair I'm trading with. I will always recommend a beginner do a stop loss because this is what happens. You don't put a stop loss in, and guess what? The market starts to continue up. So instead of you doing proper risk management and only risking 3% of whatever your full amount is, you just like, I'm not gonna put a stop loss in. And guess what? It keeps going up and up. Instead of you stopping right there, it keeps going up and up and up, and you just losing money because you could have prevented it just by simply putting a stop loss there. So that's important to have that stop loss. And so what I would do is, this is US 30, it's calculated different. Let's just say this was the CAD euro, and it went down, like you said, 121 pips. We would either times that by 10 cents if I came in with a 0.01 lot size, like they did right here. Or if I would have came in with $1, it would have been 121 times, that dollar. I would have had $121 and so on and so forth. Does that not make sense for anybody?
Is this an example of one of a stop loss or?
Well, we haven't really got on the stop loss video yet. I was just basically showing you guys. I was just kind of showing you, like, if you're going for your TP, whatever your take profit is. Like I said, if we're selling this market right now, and you like, I think it's gonna go down. I feel like it is, but I'm not sure. If it doesn't, I don't want it to go too far up in the opposite direction, because you know the market's gonna move, so it will go up a little bit before it goes down. But when you gave yourself a stop loss, if it goes too far up, it'll just knock you out the trade, and you'll be knocked out minus 3% of whatever your account is. So, for example, if you had $100 in your account, and you only want to risk 3%, which is $3. So if you calculate it right, you would only lose $3. And guess what? You still have 97 to trade with again, versus not putting a stop loss in there, because I know it has happened to people, not putting a stop loss in there, and it go all the way back and you lose $50. Does that make sense?
Well, I was gonna say, I know about only use 3% of the amount, but is this an example of when it's going? So when it's going up, is that bad, or is it in a certain situation?
Where's no bad or good? It just depends on what you're going for. So let's switch it around. Let's just say we want the market to go up. This red line is our TP. We want it to go up, but guess what? It doesn't go up. It starts to go down. So this yellow line is our stop loss. It'll catch us and knock us out. So either or, if you're going for a buy or a sell, you're always going to set a stop loss.
So I'm just, because I know it's kind of probably confuse other people, because I can see kind of where. So I want to buy when it's going down.
No, when the market.
I want to buy when it's going up.
Yeah, like look at this. Like the market is going up right now. It's going up.
Yeah.
So when you start to learn how to analyze your chart, you're going to be able to predict and say the market's going to continue to go up, and I feel like it's going to go up where this red line is. So I'm going to make this my take profit. But if I'm not confident and not sure, I'm going to put my stop loss in so it can catch me when it rises down. You want it to go up, but if it doesn't go up like you thought it did, and it starts going the opposite way, the stop loss is going to get you.
Yeah, I understand the stop loss, but when it's going up, am I trying to buy or sell?
Yes, if the market's going up, you're buying. If the market's going down, you're selling.
Right. Okay. I just wanted to make it like concrete. Okay. Gotcha.
Cool beans. Did anybody have any other questions? Want me to break that down a little further?
Yes, I have a question. This is Miss Edmonds. Can you hear me?
Hey, Ma.
Hey, Nina. So basically, either if it goes up or if it goes down, you're still going to make a profit off of it, right?
No, you're not gonna. If you come in as a buy, you're buying in this market. If the market goes in your favor and it continues to buy, then you're going to hit your take profit.
Okay.
If the market is if you thinking it's buying and it really don't buy, and it turns around on you and starts going down, you're going to lose 3% of your account.
Okay, even if you have your safety net, you know what I'm saying?
Stop loss. Yeah. Yeah, the stop loss is this there to stop you a little bit. That's
okay.
Yeah, it's like instead of it's like I'm driving, boom, I hit the wall, versus I'm driving, ain't nothing stopping me. I'm driving. You just lose.
Is the stop loss line going to completely stop it?
Whenever this market hits this line, if this is our take profit, it will knock you out. You'll just be out the trade.
Oh, okay.
Okay, and another thing, you said if we're coming in buying and it goes down, so is it that we have to cut? I'm just trying to get the whole orchestration of it. So when but before we open up the graph to analyze it, is it that we're already coming in with it as already put in as a buy?
No, nothing's gonna be put in. You're gonna go. You will look at this. Of course, you probably don't know right now. You're still new, but you're going to look at this. You're going to analyze, and you're like, you know what? the market about to continue up. It's going to keep going up. I know it's going to keep going up. I see it. I did my analysis. I checked back before. It's going up. So you would have to go in your MetaTrader 4 and place the number where you think it's going to go up at. Let's just say, for example, let's use it. Just put another line here. Let's just say you feel like, you know what? It's going to go up. It's going to hit this red line. That could be your first take profit. And then you're like, you know what? But it's going to keep going up. I think it's going to go up to this yellow line right here. Then you could come into another trade and put this TP on it.
So that'll be two different trades? Two different
trades, same pair. Yeah.
Okay, and whatever, and you said whatever that number is, I go and type it in on the MetaTrader 4.
Yes, that's correct.
Okay, gotcha. I just got that part. Gotcha. Thank you.
Cool. Great questions. Amazing questions. Did that make sense, Mom?
Yeah, I kind of understood it. So when you're saying it's two different trades, that are we talking about? And I'm just throwing this out here. When there's two different trades, is it like London and New York and Germany and you know what I'm saying, like that? Is that what you're talking about with two different trades
on the same chart?
No, the same trade. We'll just be coming in twice. So the first time our take profit will be right here where this red line is. Then we'll come back in again, same pair, and we'll be like, you know what? I'm gonna put another order in because the market is gonna continue to go up, and then this yellow line will be your next take profit.
So one might be good and one might be bad after you come back and check it.
Oh, okay.
Yeah, in the essence, it's like, okay, my first one closed out, but maybe this one didn't make it or something like that. That can happen.
Oh, okay.
And
so
is it that it's two different of the 3% of the total or whatever?
No, all of it want to be 3%, so it's the same thing. So if you're going up here,
I mean, is both trades out of the same 3%?
Yes, both trades are the same 3%.
Okay.
It's 3% of your entire account.
Oh, okay.
Your entire trade?
Your entire account. So if you got $100 in your account, it's 3% of 100. If you got $1,000 in your account, it's 3% of 1,000. If you got $500 in your account, it's 3% of 500. So 3% of whatever you have in your broker's account.
Oh, okay.
So when we put in two different trades out of that same 3%, when one of them messes up and the other one it reaches it, does that take away some of the amount?
Yes, good question. So let's just say, let me move some of this out the way. So let's just say, it did go up to your red line. You made $20, right? You made $20. So now your 100 is 120. But you got that second trade, and you want that second trade to go here. But let's just say it doesn't go there. It doesn't matter. We got our stop loss. We'll just move our stop loss up. And if it doesn't go up to this line, it'll fall back down. It's only going to knock you out of 3%. So if you don't win it, instead of having 120, you minus 3 from that, and you got 100 and what 18 or 17?
Well, how would I be able to move that trade line up? Is that after that one has already hit?
No, it's your stop loss. That's all it is. So just like the first one had a stop loss, the second one's going to have a stop loss.
Okay.
All righty. Great. Amazing.
And you said something about moving it when?
Well, you're not moving it. I'm just showing you an illustration. So I moved this line up to illustrate that this is a stop loss. And yeah, that's a little advanced. You can move it, but we will talk about it differently. I don't want to confuse nobody. But yeah. Those were amazing questions. Does anybody else need any clarification? Because you want to know about lot sizes. That's your money. All right. So where we at? We're at 9:09. Woo! I think that's gonna be the last video for tonight. Let me see. How far did we get? Okay, we got pretty good. Let me see. Yeah. So what we're going to do right now, really quick, is we're going to open it back up for questions. We're going to have let me turn my light on. We're going to have a little homework assignment. We got to take it back school style, y'all. Just like we did in school. So we're going to continue next Monday. We're going to come on here. We're going to knock it out. We're going to go through all of these videos together. We're going to explain it together, right? Because you see how easy it was when we came on here and explained it together. We made it practical. So we're going to knock out all of these videos Monday, right? And then when the next Monday come after that, we're going all the way back from the beginning again. We're going to continue to do this every Monday till everybody on here knows everything by heart without notes. Why are we running it back? Because guess what? 2 weeks from now, we're going to have so many more new people. And to make it fair for them, they're going to be able to go back to the basics from the beginning. So really quick, you guys, we're going to mark up some charts. And I'm going to tell you what that means. But before I do that, for some of my new people that have finished up the academy, you're probably wondering, okay, I got the academy, but I still don't understand it. And a lot of times it's because the academy is just the meat and potatoes. It's the foundation. It's the vocabulary words. It's the ins, the outs. But you have to be able to take that and apply it. And one of the ways that you apply it is you go to IML TV. So if anybody didn't see me do that, I went right under here in this box, and I recommend you go into all of these. Just click them. Just click in them. Just read them. See what's going on. Mine is slightly different from yours because I'm a business owner, so mine is different. But you're going to go to IML TV. IML TV is going to bring you here. You go to whatever language is your language. This will all, so for my beginners, when I mean beginners, that means you're still brand new. You don't know what's going on. You don't know what the trend line is. You need to go right here to the Forex Basics, because this is live TV. This is kind of like what we just did, but instead of you actually like talking to the people, you can type. Like some people were chatting, they didn't actually say something. I'm totally lost on this call. I can't even lie. It's all good. It's all good to be lost. This is something new. It's just like riding a bike for the first time. You don't just hop on a bike and you just going. You gotta practice. That's all it really is. So here's the basic IML TV. So instead of like us talking, you're able to chat, just like somebody just chatted with me in the comment bar. So we can go right here, check this guy out. You can pick whoever you want to pick. And you have recorded. It says recorded videos. Let's just say you want to go all the way back in his videos. He's new. So his first video was on the 12th. So you would go there, you get this catch up to see what he did. If you want to see him live, then guess what? It tells you what time they're going live. So even if you got to work, you got to do this, you got to do that, one of these people is going to rock with your schedule because they do it all times of the day. I will give you a recommendation. I love Abel. I haven't tried out anybody else, not to say that they're not good. I just love the way he teaches, but to each his own, right? And then so for my people that have been in this for a while, your market up charts, you guys need to be in the advance. Watching this TV, you guys, that's the only way it's going to make sense is if it's put into practical terms. So you got a lot more educators over here in advance to choose from. A lot of people like Orrin Wright. I like Christopher Terry. I can understand Christopher Terry. Some people, it's all about your preference. I just started watching her for US 30. Right? So you got all of these people to choose from, and they look at them. They come from all different walks of life, all different creeds, nationalities, and ages. If they could do it, you could do it. The only thing different probably is they just dedicated the time, right? So, okay, so that's that, you guys. So make sure you take advantage of that. One more thing really quick, because our Wednesday call, we're going to be talking about the harmonic scanner. So just if you didn't know, you get to the harmonic scanner by going to imlharmonicscanner.com. You log in with your normal username. We're going to go over this on Wednesday, so I'm not going to really take any questions on this right now. We're going to go over it on Wednesday, but I just wanted to show you how to get there. But if you go to the TV, you're probably like, okay, I don't know how to work it, Isis. Guess what? Look at this, Harmonic Scanner TV. If you don't know this, you guys, this is 90% accurate. Somebody just said it's confusing to them, but guess what? It was confusing to me. But what I did is I took advantage of this harmonic scanner that's 90% accurate. It's doing 90% of the work. Look at it. It's already telling me where my take profit is, where my stop loss is. So for Brittany, that was like, well, how am I supposed to know if it's a buy or a sell? Well, as a beginner, use this because it's going to get you paid. It's telling you it's a buy, and it's telling you it's a sale, and it's telling you where it's going to go. But like I said, we're not going to get deep on this. I just wanted to show you. So check this out. Computer's about to die. Check this out. Right? Check this out, you guys. Look at these different, let me put my charger in really quick. Look at these different educators that you have. So the only way this is gonna work, you guys, is if you apply yourself, right? No, like I always say, like no mentor or anything, nothing outside of you is going to really help you but you. Like these calls are great because we get to go on a deeper level, but it's going to take you really putting some work in. Not a lot of work because these videos are only an hour. We could take an hour and just watch some, 30 minutes in the morning, 30 minutes at night if you can't do the whole hour. But I started learning from him. When I first started, I was making money just with the harmonic scanner. I wasn't even really marking up charts. I was just learning from him. So we'll go over the harmonic scanner, but before we close this out and mark up a quick little chart, is there anybody have any type of questions off of what we kind of went over today?
No.
Okay. Okay, cool. So write this down. We got a little bit of homework, right? And y'all probably like, oh, Lord, homework. Yeah, y'all homework for yourself, though. I'm not going to check it or grade you or anything like that. Like, y'all are all grown, but I do want to hold you accountable because our mission is to be master traders. And the more we put this in our brain, the easier it's going to get. So have a pen really quick. And a couple questions so you can get it. We want to know, I want you guys to write down what are the exotic pairs. Question number 1, what are the exotic pairs? Because nobody could answer that one. So that means that we need to know off the top of our head. Now I know, but if I tell you, that won't be fair. So question number 1, what are the exotic pairs? Question number 2 is list all, no, well, it's not really a question. Number 2 is list all of the major and minor currency pairs. List all of the minor and major currency pairs. List all of the major and minor currency pairs. All right. Number 2, what are the 4 sessions that we trade on? What are those 4 sessions? Also, what time do those 4 sessions start? And then what pairs do you trade on those 4 sessions? So that's a 3-part, to number 3. So the first one was what are the sessions? What time do they start? And what pairs do we focus on when those sessions are in session? Okay. Then the next question, which will be question number 4, is who is participating in the Forex market? We need to know who is in this Forex market. So figure out who are the participants and what are their jobs. So for example, I already give you a bonus. We know retail people are us, everyday people trading our own money. But those other people, figure out who they are and what role they play. And then 2 more things for the homework, you guys. 2 more things. Where's my notepad? The other one is lot sizes. I want you to I want you to kind of do some examples with yourself. If you got to go back and watch this lot size video, you can, because you got a whole 7 days until next Monday to go over those videos we just did. So I want you to get familiar with the lot sizes. So for example, write down, what is a 0.01 lot size? Is it 10 cent? Is it 20 cent? So just basically get familiar with the lot sizes and write the chart out for the lot sizes. And then the last one is what is a pip? What is a pip and how do you calculate pips? So this is going to take you some homework. I'm not going to tell you how to calculate the pips. You gotta find out on your own, and then we'll go over it on Monday, and we'll start the next video. So really quick, you guys, I got about 5 minutes. Any questions?
You can find a lot. You can find a lot of this information in the videos, right? I mean, I know some of it you can.
Yes, yes,
Okay.
you can. Yep.
Okay.
Anyone else? I'm actually going to skip the marking of the chart part until we get down to here where it starts talking about that. I don't want to throw anybody off. Any other questions? Sydney, are you good to go? I know you had a couple questions with understanding things.
I think I'm good to go. My questions were more towards the harmonic scanner part. So I think Wednesday would be my best bet to ask those.
Amazing, amazing, amazing. Yes, definitely. Make sure you guys are on the call on Wednesday. If you guys don't have any other questions, don't hesitate. You always can text me or put it in the community group, because then therefore you'll get a whole bunch of answers versus just my answer as well. So just a couple quick announcements really quick for the Atlanta team. We will be doing pizza and pips on Thursday. What is pizza and pips, Isis? Pizza and pips is from basically 8 to 10 o'clock. So from 6 to 8 is going to be the team. Basically meaning we're going to be eating some pizza. We're going to be going over the charts. We do different things as a team on Thursday, but we're going to be doing some trading. We're also going to be talking about branding and different things. Why is it important for you to do your best to come out there? Because it's your time to meet different people in the community and also to get some hands-on action. Like I make time on these days to do certain things, you guys, to make sure I'm here to support you guys. So afterwards, from 8 till about 9:30 is going to be opened up for guests. So if you have anybody interested in this, they want to learn about this, they can come at 8 o'clock. And from 8 o'clock to about 9, maximum 9:30, we're going to be breaking down what it is we do. So it's going to be basically like a mini presentation, and people are going to be sharing their testimonies. So I will put the flyer in the group for that. Don't worry, so you'll know. One last thing, Dallas. I cannot stress it enough. How serious are you about this? Right? Really, is this a hobby? Is this something you're doing on the side? Or are you really serious about taking this to the next level and making your millions from this? So when you log onto your website, a lot of people keep asking, well, where can I buy the tickets? I'm not sure if this is on everybody's page, but on mine, it's definitely right here. Buy tickets now. You want to be at this event, family. You do. Even if you gotta sleep in a run, if you gotta rent a car, you gotta sleep in a car. If you gotta sleep on the floor at somebody's hotel, wherever you gotta do, you want to get to this event, you guys. Events change lives. They change lives. So you can go to also I am convention, buy your tickets there. The goal is to get a apartment all together, although I'm not a last minute person. So by August 1st, whoever has paid, I'm going to go ahead and book the room. We can try to work something out later, but the sooner the better, you guys. So if you want to save on your room or whatever, definitely let me know. We're already accepting payments. It's $100 for the 12th all the way to the 16th. So if you want to cash out the full amount, you can cash out the full amount. If you want to reserve your spot and just put $50 down, put $50 down. I do want you to know it's not refundable. Why is it not refundable? Because if we already got set, the room costs a certain price, we had to divide it by a certain amount of people so that everybody can honor the $100 price. Then when you pull out, that just messes up the whole flow. So definitely make sure you're going for sure because it's not refundable. I did want to put that in there, you guys. So I love you all. I'm super tired, you guys. I literally just got back from South Carolina, but I wanted to make sure I came on here and gave y'all some value. For sure. I love you guys. I'm super excited to just hear everybody's success stories and just hear how this is changing your life. So stick to your trading plan. Don't get greedy. If your goal is $50 a day and you make $50, you're done. Okay, you're done for the day. Who cares what somebody puts in the group? Okay, so this is going to be uploaded and you guys will have the recording. When the recording gets in the group, make sure that you subscribe to our YouTube channel so that you always have the updates of our new videos. All right, family, peace, love, and light.
Peace,
Bye.
fam.
Peace.